Oil prices are trading up, and we will forgive Ali Al-Riyami for not attending our roundtable in London. The Lori Hatain had already received her permission not to attend slip, but Ali didn't, so he goes in the naughty corner. But that's 3 strikes, you're out. Welcome everybody. Oil prices this morning in Asia trading up, but still below $80 a barrel. That sort of floor, if you like, that's been there for most of the year, with occasional dips below. This is clearly the biggest dip below, and we take stock that the bankruptcies in the US, at the moment at least, still seem to be trumping any optimistic outcome that China cavalry is coming over the hill to save the demand day. Let's go straight to California, to Richard Redoglia for his insights this morning, Chief Executive Officer of Matrix Global Holdings, of course. Richard, is this crisis, this bankruptcy issue, is it a moment in time that will pass? Is it passing, or has it a tail? Your thoughts?
I think it has a tail. The structure that put us here took decades to put in place, and low interest rates and free money it's coming back to haunt us. I just was saying to Ali and Laura that I believe I just saw on the wire that Wells Fargo is looking to raise $9 billion. Wells Fargo is one of the largest banks in the United States, and if they're not doing that for fun, right? They're selling stocks and bonds, and so they're going to be diluting their current shareholders, and so that's a problem. If we remember back, I remember back the '96 crash, the '08 crash. I was on Wall Street and kind of lived it. I don't think we have it just yet, but there is some real problems, and I think this is probably one of the greatest effects, I think, on the energy markets, on the markets in general, right? I think when credit markets start to seize up, everybody goes to their corner and holds on to their dollars, and I have to think that's one of the things that are happening. I don't know if it affects demand necessarily, but from what we are hearing and what we're reading, this is not going away. Credit Suisse was also talked about being the next bank to be going under. So if we, remember, how did this happen? This happened because, as I was looking back at some of the recent news, SVB was a large bank in Silicon Valley raising large sums of money, where it was offering 3 and 4 and 5% interest rates for large deposits, $2, $3, $4 million deposits, which was turning and feeding back into the maw of the Silicon Valley startups. That all went, and I believe it grew rapidly over a 2.5-year period. The problem with that is they mismatched, right? They bought the long end of the curve. They owed short-term money, and when interest rates went up, their long-term bond positions at 2% lost significant amount of value, which really comes to an issue. What do the regional banks in Europe look like that have zero interest rates bonds on their balance sheets? So, this is not a one-way street. This is not just the U.S. This is a function of the printing of money for long periods of times and forcing the financial institutions to buy the paper at those low rates, and then the turnaround of that is raising rates rapidly, and that's on the short end and that's why the curve is inverted, and that's the problem we're in right now.
I suppose if you can print trillions, you can print trillions more. Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. As we exist in the universe here, where we don't have a printing press to make money, we have to work hard every day and actually earn a buck. OPEC report yesterday that China demand outlook looks, better than was previously forecast, more or less a bullish outlook for China demand. Will that be enough to give this sort of morning's upward motion in oil prices? Your thoughts on China demand recovery trumping any of the crisis in the US at the moment?
Well, thank you very much, Sean, for having me today, and apologize again for not being able to do it in London, but it was something out of my control, actually.
Sure.
But anyway, we needed to have a good news, after the crisis in USA. So I think the report it did help to raise some momentum and also to raise our expectations. That is good. It has been taken very positively in the market, and we've seen the result of that the prices went a little bit up, and I hope that this will also support going back again to normal life, if I can say so. But again, I mean, the financial crisis in USA, this is something that it is going to bring everybody's hope down a little bit. And I think that it is going to continue for quite few weeks and months, maybe, until we settle and until the government, the American administrations interfere and try to come up with a magic solution. I don't know how and when are they going to do this, but this is what we hear from the government, from the USA government. But overall, I think this is the Asian market, and especially the Chinese market, is quite promising. And we have started seeing some growth. We have started seeing some demand from Asia, from China in particular. So all of this is good news. But we have to wait and see that if this is going to be sustainable. There is no other hiccups can happen here and there. But so far, I think it is a very good support for the market, and we need it actually.
The Lori Hitayan, MENA Director, Natural Resources Governance Institute, now in the MENA office of Brussels. I'm not sure how they go together, but nonetheless, a nice place to be. Lori, whenever oil prices dip below $80 or dip into territory in which OPEC Plus are not comfortable, we tend to get a soundings from the Saudi oil minister. And we did again overnight and in the newspapers today, an interview with the news service Energy Intelligence, and him pointing towards, well, if our oil was price capped, we would not sell it. I'm wondering what message do you take from that? I.e., is he telling us that Russia is going to stop selling its oil, or how do you interpret his commentary overnight? What should the markets take away from it? Lori.
She froze.
First of all, let me tell you how Brussels and me tell you how Brussels and the Middle East work together. So basically, I am watching what the EU is intending to do with the MENA region regarding the energy transition and all of the clean energy and hydrogen. So this is what I'm watching closely here with the EU to see what are the plans and if they are realistic. So on the other, I don't think it's about Russia. It is about like this bill again that they're discussing about the US, the NOPEC, and threatening that they will take action. So that was the reaction to that point, saying that we are not going to sit and watch you do this to us. And we will have a reaction that will create more uncertainties in the market, and then take it and look how you will deal with it. So that was the clear message that he was saying. He said two things. He said, we're not going to change the OPEC Plus decision. So you have to wait until after Christmas, 29 December. And the second thing, he said that we are not going to sit and take whatever the Americans will decide about the NOPEC. So it was a direct message to the Americans that don't fool with us. We're not going to take it. And
I was just going to interrupt you and say, does anyone believe that NOPEC will actually pass? It's that just that noise that appears every few years, some kind of a stick without any real meaning. I don't know. Maybe this time it's different. Is there any teeth in it on this occasion, Lori?
I think no. But again, seeing that what they've done about the caps, etc. So there is a fear that if you accepted the Russian, or the sanctions or the decisions taken against Russia, so next they can do it because they've done it one time. So then this opens the way of, okay, so then we can do these things. And that's why the Saudis are warning, saying that don't go don't cross the lines and create these imbalances in the market, because it is going to have a bad implication on the economy in general. And this is what he said. And when Saudi Arabia says, I will stop producing or I will stop selling to some places, that is not a small thing, right? So, this is my reading of what has been said yesterday. Just a warning to the US.
Yes, a shot across the bow. Richard Radoglia, just picking up on the earlier comments there, and I want to intersect them with the other news story that those two come together. That is this the end of the Fed tightening cycle? A week ago, we were thinking maybe 50 basis points. Now there's even some speculation of a cut at the next meeting next week. Your thoughts on where these two intersect, the current bankruptcy crisis and the Fed? Where do they go next on rates, given that yesterday we had a print of 6% on inflation year on year for February?
Well, I'm not a Fed expert, but I think you have to. The tea leaves are saying just that there'll be a pause. I would be amazed if they actually cut rates. I do think, though, that this is showing the complete real disaster of U.S. policy on every level. You know, here we are raising rates and taking banks into bankruptcy. At the same time, we're talking about a NOPEC bill, which is illogical on its face. I'm not sure if you're aware, Biden. The energy policy of our current government is being told to us by the Saudi minister. He's saying, and I've said this for the last 3 years, he is saying that if you don't increase or look to increase your capital investments in upstream oil production, there's going to be a point in time when the Middle East is not going to be able to increase at a high enough level, and it's going to cause extreme volatility. And so, what are we going to do? We're going to keep the market flat. Interest rates will, let's say they cuts, the stock market will rally, and here we'll go again. At some point, Sean, you said a couple times, you say the word trillion. Trillion is not a word we knew 10 years ago. Trillion is said all the time now. That's not it doesn't make any sense that we're talking about trillions, and that's a real problem.
Everybody's a trillionaire, right, Lawrence?
Well, but the real problem is, and I think it's our misguided energy policy. There's the ConocoPhillips just signed a project called the Willow Project in Alaska to invest $600 million. There's going to be 600 million barrels of reserves, and the left went out of their mind. The progressives went crazy. The fact that this is the policy that the U.S. government said it's okay to build on this stretch of.
I'm going out of my mind this week as a person who somehow was left of center, but now I don't know where I am. But the bailing out of these banks, to be honest, has me more concerned than the actual bank. The bankruptcy to me is part of the natural order of the jungle. But bailing out beyond the legal requirement of federal insurance, this bailing out of the banks thing, and the bankers saying, oh my God, we need to be saved. Oh, I hate the government. I mean, it's a complete and utter contradiction. That to me is the crisis. Your thoughts on the government moving beyond the requirement of $250,000 deposit and let the chips fall where they do after that?
They had to do something. The run was going to start. Remember, in this case, unlike 2008, where they bailed out the actual companies, here the bondholders and the equity holders are going to zero, right? So that is happening. But I agree. We're bailing out high net worth people. There's no question about it. The people who put in $4, $5, $10 million into this bank. Remember, this bank did not just loan money to the startups in Silicon Valley. It kept all of their payroll, all of their savings, all of the accounting of I think it's 2,000 companies in Silicon Valley.
These are the smartest people on the planet. They should be smacked for their negligence, not rewarded. I let the chips fall where they may. I really don't get it.
it's gonna be a snowball. Let's not remember the same things happened to the Japanese banks and the German banks. No one's walking away from this. It's just who bails out who. And my guess is, as we've already seen, we had at your talk, big companies that make the wrong decisions, be it in finance or in energy. Guess what? They get bailed out, and the government says, "Here's the money," and guess who pays for it?
Let's go to the chat room, as we promised at our lunch meeting in London that we would on occasion. Rustin Edwards is barking, China is the overstated white knight, Ali Al-Riyami. There is no savior coming over the hill. China data out today, not very impressive. Ali, if we don't get this China resurgence, where it's a bit tepid in the second half of the year after we had expected it to be softer, are we getting into territory as Brent drops into the 70s where OPEC Plus may need to take some action sooner than waiting till June when they meet next?
I'm not really in favor of OPEC interfering to this, not fundamental issues to do with oil and gas or oil in this case, and it's just only to interfere because of the bank crisis or financial crisis. I don't think that this is correct and this is good for OPEC to do so, unless we see some fundamental supply and demand, and there is energy or oil demand crisis or something, then yes, I will expect OPEC to interfere. But it's just because the price of oil went to 70 because of something else, then I think this is now trying to fix the prices, and that is not really OPEC business. And then yes, we will talk about the American, OPEC.
Well, the wait and see game, Ali, that China demand recovery can be the trump card over whatever we already had weakness outlook for the OECD. Were we going to be a light recession? Were we going to be a deep? I mean, this bankruptcy thing has kind of just accelerated a lot of these pieces that were already in play. Was China going to trump the Eastern Asian demand recovery, going to trump whatever weakness we saw in the G7? That equation still exists. And I'm wondering,
Yeah, it does exist, and it will continue as long as we have this kind of, hiccups here and there. I mean, China alone cannot, support the demand of the world economy, and we need to get the support from different countries. I mean, we keep on asking or keep on talking about the China growth, China economy, and so on and so forth, the demand of oil in China. But again, we have to also to see what is happening elsewhere. And if we see the crisis we have in America at the moment, this will definitely affect and impact the world economy, definitely. And there is a fears now in America that this could go to recession. So if that happens, then I think we are talking again about the world growth and the oil demand and so on and so forth. It's all connected now. We cannot just split the things. This is China, this is Asia, this is Europe, and this is America. It's all linked at the moment, and I don't see that to take this to take this out of the whole picture. China is doing good. China is going to do well, inshallah. We hope that the demand of oil, the demand in China will pick up sooner or later. But they will need support from other sources or other sectors. Let's put it this way: other sectors to support that growth. Without that, yes, for that,
Laurie,
we need the demand to grow.
Now that Laurie is our European correspondent for New Energy, and most importantly, the sadly acronymed IRA, which once upon a time used to mean something completely different than the Inflation Reduction Act. But the quiet storm brewing between Europe and the United States, which all of this other stuff is pushing it way, it's not even getting a small paragraph on page 10 in the newspaper. But ultimately, Europe and the US are at each other's throat on this new energy outlook, new industry, economic opportunity. Perhaps, Laura, you could give us a little bit update on that, and where is it going?
So definitely, as you said, they're trying to play it, to underplay it, to downplay it, if you want, because they don't want to show now that there is this tension between the US and the Europeans. But definitely, the Europeans are not very happy with what they have seen in that Inflation Reduction Act, and they see it as a competition, and they see it not as a healthy competition for now. And this is why the Ursula von der Leyen was in the US, and they said that they agreed to create the space for dialogue and for complementarity, and to see how they can work together. What we are waiting here in Brussels is there is the Net Zero Industrial Act. There is the Raw Materials Act that is going to be soon. We will see something coming out of that. That will kind of, which is the counterpart of the IRA, how to support, especially on the critical or the raw materials, how they're calling it, which are the critical materials, minerals that are necessary for the energy transition, and to push for the energy transition, to wait and see what the EU has put on paper, and how they will incentivize the companies to really either produce here, or to attract companies to come and do the work here, or how to act vis-a-vis other places where these materials are being produced. So definitely, and we are seeing, some are saying that, the American law is straightforward, easy. You do this thing, you get an incentive and taxes, etc. While in the European Union, it's more complicated how they do the incentives, etc. So some are saying that you should be very simple like the Americans. Others are saying no, we do have these standards, about governance, about just competition or just transition even. So there are different ways, I guess, and different ways to look at business on each of the continents. So I think this is something that they want to take it as, let's talk, let's not make it a competition, because at the end of the day, both of them, and to understand that the bigger issue is the competition with China. Or we know, we've all seen these maps where everything is being processed in China regarding the materials necessary to the energy transition. And if you're pushing for energy transition and saying that you need to double, and not even double, big numbers of your production increasing in materials and in production, and all of that is happening either not in the EU or in the US, and it's happening other places, and the processing is happening in China. So your future and all your plans about energy transition, it's in China. So now the US and the US and the EU are trying to pick up on that and see if they can narrow the gap.
Well, they need to hurry up. They need to hurry up.
China is beating that.
They're too busy agreeing to build nuclear submarines than to get their new energy technology sorted out. Let's go to the survey question here. Will a maybe on China demand recovery trump concerns for demand from US bankruptcies in Q2? Will the maybe of China demand recovery trump concerns for demand destruction from US bankruptcies? China demand wins, US bankruptcy wins, in the sense that the demand will fall or with US bankruptcies, or demand will rise sufficiently with China demand. Give us your thoughts on that. Richard, are we still, as we started out our conversation sitting in the US, does it feel like we're still, because from this distance, I start to feel like the storm has passed. You go on the news, they're talking about the weather in Malaysia or whatever. It's no longer the world is going to end moment. Are you telling us this morning, actually, the US is still in firefighting crisis mode?
I feel it. Talking to my friends in Wall Street, they feel it. No one's is thinking this thing is over by any means. If what I read in the news is right, that Wells Fargo needs $9 billion then that's a huge story. That doesn't go away. I mean, I think that it's our governments are trying to do all these things. They've just spent 12, 15 years, 20 years of printing money. Now they're trying to do an energy transition and direct capital from one point to another. They're trying to deal with different flows where they've, a NOPEC bill, which wants to reduce the importance of OPEC and move away from hydrocarbons, but then they want to move over to get minerals from China. It's upside down. In California, I can't even have normal conversations with my friends anymore. We need to build 5 times more renewable power every year for the next 15 years to make the amount of baseload power we're going to need when cars become electric. That's not going to happen. It is not going to happen. And so the concept of energy transition is all well and good for us. People in the energy business will make money, will trade, will do these other things. I feel for the people at the bottom end of the price curve who are going to have to pay a lot more for energy going forward. And what the minister said is exactly right. If capital does not flow into the upstream sector, then we're going to have a problem 2 to 3 to 4 years down the road, because energy prices I can see can get much higher. What happens here in the short term, I don't know. I think it's tough to say, but I think we are looking at a problem down the road where it's not going away. This crisis we're seeing in the U.S., I don't think is going away at this moment at all.
Ali, I wanted to get your views on the other stories that we had today in our digest, particularly the ones related to the fact that Russian oil and oil products are coming into the Gulf, finding a home here, maybe being consumed. The Russian diesel at a discount, obviously very welcome everywhere in the world. But your thoughts on the outlook for that? How does that play into the exports from the Gulf region of oil, crude oil, and oil products?
Well, actually, the oil is been flowing now for the few months actually, and it comes to the region here. And I don't know what the refineries think about it, but it is getting there, and for discounts. And I'm sure that if this is going to continue, then I think the refineries here will be no different than other refineries that they are looking for a cheaper crudes to be refined in their refineries, and the margins are going to be higher for them. And this is good news and good story for them. Talking about products, I don't think that this will continue, because as you know that we are very much also trying to export products. Most of these refineries that they are for local use, but again, if there is any extra volumes, then they're taking it out to either Asia or somewhere else, India and Pakistan in this day, and Sri Lanka. So I think for the gasoline or other products to come all the way from Russia to the region, it is going to create a big competition unless there is a good discount on this Russian products to the region. We have seen that discount on the crude oil, but if that's going to also to be on the products, then if the answer is yes, then I think there will be a market for that. Companies will benefit, and they will try to get the advantage on that, and they will continue. So let's just wait and see if this is going to happen, or it is going to be like a one-time kind of a transaction, and it will just disappear. But I think it will have some impact on the local refining products in the region.
Okay. Laurie, last word for you today with the survey result. I wanted to get your thoughts. So U.S. bankruptcies, demand destruction will trump whatever China demand recovery is on offer. Laurie, a month after the terrible, tragic earthquake in Turkey, we wanted to get your thoughts on what the sort of legacy impact of that may have on the presidential election in Turkey, which is now coming quite soon, with the announcement that the opposition there seems to have consolidated around a single candidate. Your thoughts on those two things?
Look, this is big, and I think this could be like the other earthquake, like the political earthquake, if Mr. Erdogan loses the elections. And now we are seeing all these surveys coming out and the polls coming out, like showing like a big advantage for the opposition, and especially that it was very well read and seen that there was this consolidation of one candidate against Mr. Erdogan. So I think for now, all the polls are showing that Mr. Erdogan will lose the elections. And if he loses, so that's someone that has been really into the politics of the region and even regionally and with the EU. So you're going to see some an established political figure that is going away and a new person coming in with, I guess, with new politics, with new behaviors, with new vision of how to see the Turkey's relation with the region and with the EU and even with NATO. So I think this is a big thing. And as I'm saying it, if Erdogan loses, this will be the political earthquake that is the direct result of the natural earthquake that had happened. So this is where we are today. But you never know.
Just a very quickly yes or no on. Do you expect that he will, yes, agree to the NATO expansion before the election, or no, he won't?
It will depend if this will make him lose or win the elections in Turkey.
I suppose the answer to that, we will wait to see. We're going to have to wrap it up there. Thank you, Richard Dadoglia in California, Laurie Hatayan in Brussels, Ali Al-Riyami in beautiful Muscat. Oil prices trading on Brent up, recovering some of the losses over the last few trading days, trading up 1%, over 1% at 78.35 on Brent. Be interested to see if it can make that recovery back above that very, very important floor of 80. We'll have to wait and see. Thank you very much. Every morning, 10:30 UAE time. All the best.
Thank you. Bye.
Cheers,
Thanks,
guys.
everybody.
Bye.
Bye-bye.